Good morning. It is Monday, the 24th, coming into the end of the month here. And let's come into the charts and see what we've got to work with today. Well, the E-mini had a little bit of a sell-off going into the close. And we continue to get this thing where Bitcoin has been moving down and has just been getting the absolute living tar beaten out of it. And equity indexes seem to be responding and being a little bit weak as a result. Maybe I'm reading too much into it, but that seems to be the thing at the moment. Treasuries are just like completely flat. And, we're trading June contract here, right? So we've got to start thinking about stuff here because we got 1, 2, 3. So especially starting Wednesday and Thursday. But they're probably going to start preparing. I think we're going to need to start looking at some of like which bond is going to be issued and things like that, right? So coming over to oil up. Goldman Sachs still thinks that oil is going to hit $80 a barrel, despite all of the concerns about supply from Iran. But I don't know, that whole deal is just like, I don't get that one at all. It seems like Iran is doing everything to like not make a deal happen, but then Joe Biden doesn't care. So I don't know. Coming over into gold and silver, maybe slightly a little bit higher, but because the dollar's been a little bit weak. Overall, the metals, though, continue to struggle as China talks about cracking down on commodity trading, futures trading violations and things like that. So they're like, you're going to manipulate the market. We're not going to allow that. Cool. That should always be the case, but whatever. And then, the dollar failing this critical 90 support level. Like they were able to close just above it, but now back below it. So I don't know. Like the currencies traders really tend to care about those sorts of things. Even though I haven't been able to find any kind of statistical significance, although I haven't done a lot of studies on the currencies in particular. So I don't know. Failing 90 coming over here. And then in 5 minutes, we do get Chicago Fed National Activity Index, and there's a couple of bill auctions today. Now would probably be a good time to step back here and look at what we've got going for the week. Of course, the biggest thing coming is the roll. So now that we are armed with some more information about that, it should be interesting to watch, yeah? I filtered it out so that it would only show Federal Reserve things. Okay. How come it's not listing that particular Chicago Fed National Activity Index? Then get listed in this one. HPI, consumer confidence, preliminary GDP on Thursday, personal income, and Chicago PMI on Friday. So we do got some stuff coming later in the week. NFT is soon to be deleted. Charlie bit my finger YouTube video. What? He's gonna sell a token and then he's going to delete the video? What a douche. Well, whatever. You didn't make enough from the initial video, did ya? Ugh. Okay. Anyways, guys, how are you doing this morning? Let's turn on the Texas speech. Also got a couple of things that we want to look up for people here this morning. Oh, and we got a video coming out. Got part 2 of our continuing series about developing indicators. And this time I go into the code and I talk about a couple of the major pitfalls, like coding specific things that you should pay attention to. So I think it should be really good, especially if you're trying to get into coding. Not too experienced yet. Because my intention is to show all of the big issues, that people tend to fall into and help them avoid those. So that will be released in an hour. Let's come in here. Well, I wonder why Forex Live doesn't, Forex Factory calendar doesn't have the Fed National activity index on there. Let's see here. Joe Biden, the recent attacks on the Jewish community are despicable and they must stop. I condemn this hateful behavior at home and abroad. It is up to all of us to give hate no safe harbor. Oh, good. I was wondering if they were going to say anything. Did you guys see these videos, man? If you haven't seen these videos, you go check it out. Like there was like some protests about Gaza. So now you're seeing protests relating to Gaza all over the world. And there was some in New York, and there was squabbles between the Muslims and Jewish people there. And I was quite concerned about what I was seeing. Quite concerned. Man, am I still seeing this? So on Thursday, Friday, it was the Zero Hedge tweeted an article about energy use relating to Bitcoin. And I commented, like, how much of Bitcoin uses renewables is irrelevant because it just uses so much power. And so many people jumped all over me. I think, wait, where is that one? Because that comment has so much. Yeah, here it is right here. Oh, it's got 88 likes now. I was really surprised at how 88 likes and how many comments now? You're unable to view this tweet. So you can't see the Zero Hedge tweet? Zero Hedge blocked me? Oh, were you for real? That's fucking hilarious. Holy shit. They did not like that. They did not like that. Well, I'm just going to try and piss them off more now. Oh, man. That thread must have really... Yeah, he really... Look. Here. You're unable to view this tweet because the account owner limits who can view their tweets. Learn more. And then I go to Zero Hedge's profiles that I'm like, did they delete it? Nah, I'm blocked. You're blocked. Can you believe it? I'm going to go tell the BTC folks. That's crazy. Why you missed it? Why did they? Okay, let me go back. Okay, I tweeted I don't even remember what their exact tweet was, but it was in relation to Bitcoin being off of renewable power, which is objectively not true, but I tweeted, well, it doesn't matter whether it's renewable energy or not. The fact is that it's using a ton of energy, and it doesn't have to. You can accomplish the same thing without using energy, and there's lots of coins and so forth that are already doing this. There are coins that are already... So I specifically said it's not matter how clean it is still an enormous power usage when better technology to do it cheaper already exists today from other coins. They blocked me. They came in this Monday and saw how much activity that got, and they blocked me. Well, you can block me, Zero Hedge, but it's not going to bring your losses from crypto back. The thing is I like that website. I'll continue to push it. I have to tweet something about it now. Let me think about what I should tweet about this. It's Fugazi. We can't let people cash out their Bitcoin gains. That would make it real instead of them offer them a better idea like Doggy Coin. I mean, the thing that I think is so crazy, they all tell you hodl. None of these people are holding. Like, when I was on TikTok, at first it was like, guys, we should buy the dip here. This is fine. But then by the time Friday came along, all of those influencers on TikTok were selling. So it seems that they actually were being consistent with themselves. Like when we had a close below the weekly moving average was kind of the one that I think that they were looking at the most. Once you had closes below that weekly EMA, they bailed. And Ethereum cost of transactions raise them. Well, it's going to be really interesting to see what happens when Ethereum moves off of proof of work. I'm not convinced that proof of stake is better, but it depends on a lot of things. I read their Twitter a lot. Them banning me kind of hurts, to be honest. Now I'm going to have to make a video about why Bitcoin sucks. Like I was thinking maybe, because I still want to finish this series, but now I'm like, Wednesday. Let's do it by Wednesday. I think I can do it by Wednesday. It'd be hardcore. Even people who wanted to buy probably only got. Oh, I don't know about that, man. I've seen a lot of people that were getting in with over 10,000. I got blocked by Zero Hedge. I got blocked by Zero's Hedge by saying in regards to Bitcoin, it doesn't matter how clean it is still an enormous power usage when better technology to do it cheaper already exists today from other coins. Yeah, fuck him then. Like the thing is, I haven't been controversial enough lately. I would really, kicking the hive with Bitcoin, sure. Yeah, 1.2 trillion gone in a week. I'm wondering. So I haven't even looked at it this morning. 38. Well, that's not terrible. 38 is not terrible. So do you notice, by the way, you got this ABCD pattern? How much? I wonder if I get on TikTok today, that's what they're going to be doing, right? A, B, C. Then I think that the next leg is D, right? People getting salty over Bitcoin probably had too big size to eat this much of a drop. Yeah, well, there's so much leverage involved. So, man, one of the things was there's this big conspiracy theory, and the funny thing is I don't see it on Reddit. If I go and I search, I specifically tried finding stuff about this on Reddit. I couldn't find anything about it on Reddit. I don't know if it's just getting deleted or what, but on TikTok is this huge thing that there's manipulation and the cryptocurrency whales are trying to wash out one specific player. In particular, Justin Sun, who is the name behind Tron. And they're saying like he has a margin position on, and they tried to liquidate him, but then he had enough time to go and add more money and it didn't happen. And so then they tried pushing down again, all this sort of stuff. Well, let's see. There was a guy back in April that called the BTC chart as near perfect Wyckoff pattern. Yeah, and those same, it's the same thing. So when they talk about that, they talk about the Wyckoff thing, and it's like everybody was talking about that on TikTok. And I'm just sitting over here thinking, like, if you're a billionaire, or not a billionaire, Justin Tron's not a billionaire, but he's a millionaire. You're a millionaire. You're invested in crypto. Why would you have a margin position on like that? Like a huge margin position. Like you don't need to. It's just so dumb. They're just so dumb to do that. Am I wrong? Why would you have a margin position like that? Maybe because you're trying to use it to manipulate the market too. I don't know. It's crazy. It was crazy picture perfect, but when I've looked into Wyckoff, it's a method about as useful as Elliott wave theory, being not very. You really don't want to trade today. Well, I'm not 100% sure what it's going to do today either. The thing was, I did not like the way that they closed on Friday. Yeah? It's Memorial Day week. Well, Memorial Day is next Monday. By the way, next Monday, two things. Next Monday is my birthday. Next Monday is my birthday, 1. 2, I think we should program that risk control center. Yeah. Risk control center for NinjaTrader 8. I have like the base thing started, so we should be able to do it. Maybe people will be off May 31st. Yeah. But Vlad, it's the Treasury futures rollover, right? And that's what I'm watching. Oh, we didn't pull that up. Let's pull that up. So now I still want to be able to read zero hedge tweets. How am I going to do that? How am I going to do that, guys? Yeah. What am I doing? Interest rates. Happy birthday, treat yourself to some. I got myself a present. And I'm gonna buy something for the channel too. Something is supreme. No, but I'm not president of the United States. Zero Hedge isn't president of the United States. Otherwise, I could sue them. But yeah, then I would sue them for blocking me. Oh, it sucks. It really is shocking to me that they blocked over that. It was like, because it's a legitimate argument. Come on, it is a legitimate argument here. I'm mad about it. Go to Zero Hedge and be like, president of these nuts. I'm definitely gonna make a video. I feel like that I could clickbait off of that. You know. Could be the title of the video could be Zero Hedge blocked me, so this is why Bitcoin sucks. I don't know. Like I've been trying to be very formal about it. You know what I mean? It doesn't matter how clean it is, it's still an enormous power usage when better technology does it cheaper, when better technology to do it cheaper already exists from other coins. That you ban people off of that. Do you ban that because that's a troll and you're tired of them? No. You ban that one because they're making a good argument that you can't argue against. Because they show the traders a zero hedge can't police their emotions when some truth goes against their thesis. Well, at least I can sit back and say, oh, they know who I am. We've made it, folks. Zero hedge knows who we are. Oh. I should make a YouTube video about it. I can make a YouTube video about it and piss off all of the cryptocurrency fans, and then maybe they'll try and get our channel banned or something like that. It'll be fun. It'll be fun, guys. Okay, so what do we got here? Implied repo rate. Oh, it's positive, actually. 5/15/2018, huh? What's the difference between these two coupons? The basis net carry of this one is significantly different. Okay, so I don't think that that's going to change, but I don't know a whole lot about the basis trading still yet, so. Is 0.8 a lot? Seems like that might be a lot. Oh boy, Liz Cheney has been warning they will try to steal an election again, and this time they will be better positioned. Oh gosh, stop it. You shorted TLT Friday? Oh, hey, were you posting about that on the bond trading subreddit? Because I saw some people talking about that. I was like, See lots of people tweeting about the Bitcoin this morning. You know what? Go back up. It wouldn't surprise me at one iota. Do kind of wonder after all of this what kind of support there will be, or resistance there will be at 4,000. But no, I think that they're going to try and manipulate it back up. But I'm really hyper skeptical that they'll be able to get up to 60K. So here's my argument for why I think that they'll have a hard time making a new all-time high. Because everybody's going on about it's manipulation and why is the price of Bitcoin going down? And the way I think of it is like if you see a grocery bag floating in the wind, and then suddenly the grocery bag falls to the ground, you don't ask why did it fall to the ground? You ask why was it up in the air in the first place? Right? So from my metrics, Bitcoin was already primed for a crash and was overbought. And then Elon Musk came in and that brought even more people in and brought it to like dizzying heights, right? So now that has subsided, I don't think that you're going to have the participation necessary to get it higher. The only angle I see screwing the bond trade at the moment is the Fed not raising rates and just going Dory on the printer. Well, I'm just interested in what the basis trade is going to do going into the options expiration. So we're going to keep an eye on it. BTC was still such small market cap and daily volume to be easily manipulated, and not to mention being traded on exchange instead of on the chain. Well, so the thing is that when I look at the liquidity of Bitcoin, you can transact a lot of money in it, actually. I think that people would be surprised to know how much money you can throw through there and then do something. But the issue is that there is a lot of margin trading. You would think, hey, for something that makes, double digit percentage moves on a daily basis, you wouldn't need to use margin, right? But they do anyways. It's really crazy. It's crazy. I wonder, can I... I don't know. I don't think there's anything I can do about it. I guess I just can't read their tweets. I guess I just can't read their tweets to you guys during, I guess, I had them on my list. I guess they're not on the list anymore either. On my list of squawks. Well, when it comes to actual headlines, they didn't matter, so. Make a new account. Well, but that's where it's like, no, I need to look into TweetDeck. So I was just opening it up and I was like, okay, so like, it doesn't look like TweetDeck has stuff built in to manage multiple accounts at the same time. Actually it does. Actually it does. So if I come in as, I don't know, maybe there's an article about it. It's like, I don't know. I feel like if they're really gonna do that, then just leave me blocked. That's fine. Then I can actually troll them, because I was really just trying to make sound arguments that would help traders and people make decisions. And that's still what I'm going to do, but now I can actually, specifically pick on them. I'm still seeing a lot of tweets coming through about how Bitcoin's back on the uptrend, but I'm kind of like, look at this. Okay. Is that move unusual? No, it is not. Something about silencing, because that's exactly what it is, though, right? That's what it seems to me. Hold on. Let me eat this croissant and ponder on this a moment. It's just so like on one hand, I'm kind of like, kind of don't want to make a video about it because I'm concerned that that will be viewed as harassment of some sort. But then, like, the thing is Zero Hedge has been pushing so much this whole thing about, that the media silences voices that are inconvenient for them. That globalists silence voices that are inconvenient for them. And it's true. It's true. But then they turn around and they block me for that. It's like, okay. Okay. And how would you convince them to unblock me? I don't think I could. Unless a bunch of people on Twitter were like, yeah, this is not right. Well, whatever. Good morning, Ace. We're talking about how Zero Hedge blocked me on Twitter, and I'm upset about it. I am genuinely upset about it. Like, that's probably not like the greatest thing to admit, but I am upset about it. Because I read that account a lot, and now I can't see on TweetDeck. He's just like, oh dude, he doesn't care. He doesn't like that website. But how saying that they blocked me and then pointing out what I said and not harassing them or telling people to harass them. If I even say, hey, I think it's a good website, you should still watch it. That can't be right. That the crypto guys will try and report the video, though, right? When you're blocking, when you're so let me show you. Ace. They're tweeting about Bitcoin usage in renewable energies. And I tweeted this. It doesn't matter how clean it is still an enormous power usage when better technology to do it cheaper already exists today from other coins. It's got 88 likes and yay many comments. It's got a ton of comments. Hang on, I'm trying to do my economic calendar. Anyways, that's what they blocked me over. Can you believe that? Can you believe that? That seems to me like 100% that they just don't like what I'm saying. And that they don't want that to be viewed on the timeline when people view those tweets. So now I'm going to have to make a video, I think. See, it seems pretty chicken shit to me. So I was thinking about this over the weekend. I can't remember why. Oh, it really was because of that thread. Like, I was watching how much activity I got from that thread, and I said to myself, you know what, Seth, you really should make a Bitcoin video again. Like, I'd been avoiding this space, and it's time you speak up again. And so I was thinking, what should I call the video? The top 4 reasons why Bitcoin sucks. But I don't want it to be. It shouldn't be a personal argument, right? This is very academic, or it should be very academic. So then I can say like the top reasons why Bitcoin is failing. So from my perspective, the goal of Bitcoin was to supplant the dollar as the dominant international currency. Am I wrong? That's what so-called Bitcoin maximalists believe. That's what I have always been told. Of course, now you get people who come in and they say, no, it's not a currency, it is a store of value. So then it's not going to become that, but that's a different argument, right? So from my perspective, Bitcoin has failed because even though there's a number of things that are wrong, some of those could be fixed and have been fixed by other coins. The problem is that Bitcoin's been around and they haven't fixed those things. They haven't fixed them not because they can't. It's because they don't want to. They don't believe those things, right? ASIC production in China was a problem for BTC security like 2 years ago. Yeah, the 51% attack if you were able to get a couple of miners to work together could happen. Yeah, it could happen. Yeah. Hmm. Proof of work so far is the most solid case for mining. Proof of share is not as fair as proof of work. What else is there? That's better, please. Grow Tesla coin. Go look at Grow Tesla coin. How does it work? Grow Tesla coin is a proof of work cryptocurrency created in 2014 designed for everyday use. Grow Tesla coin features an average block time of 1 minute as opposed to Bitcoin's 10. Where is the explanation of it? Oh, there it is right there. Has a maximum supply at 105 million coins as opposed to the 21 million for Bitcoin. The main idea of creating Grow Tesla coin was to establish an electronic payment model that was purely based on mathematical proof. It uses the proof of work system to facilitate secure online money transactions. But Grow Tesla coin was chosen as one of the 5 finalists of the NIST hash function competition. It uses the same S-box as AES in custom construction. The cryptocurrency operates as an open source software peer-to-peer model. No. With a shorter block period than Bitcoin, Grow Tesla coin aims to be more functional for everyday payments. Merchants don't need to wait 10 minutes to confirm whether or not they have received their payment. The reduction in hash rate intensity also gave Grow Tesla coin an opportunity to be mined by individuals with less computing power. However, companies and teams have created ASICs for Grow Tesla coin at a higher cost than creating ASICs for Bitcoin. Rather than just a simple fork, Grow Tesla coin also works to adopt developments and additions inspired from discussions surrounding Bitcoin work that was actually one of the first adopters for features such as segregated witness and Lightning Network. Oh. Okay, so maybe that one's not the perfect selection anymore. It used to be that to mine Grow Tesla coin, it was like it didn't require a lot of power consumption, but you'd still just mine it, you know? It was basically like the way that the hash worked didn't require as much power, but still took a long time to do. But now if they have ASICs, it probably changes it, huh? Because they're not pushing it as a sustainable coin. There are things other than proof of work, though. There are things other than proof of work. You know, there's some like these ones that mining isn't even a thing. It's just a network that you can use. It's spelled GRODESL. Oh, GROESTL coin. Like that. They need a coin that is proof of stake but only disperses new coin based on new registered users. Coinbase rated buy at Goldman. Price target 306. Yep. But they're going to move. I don't really want to have money tied up in that thing. I'm sitting here like, we should buy a share. Okay, so either Either is saying they need a coin that is proof of stake but only disperses new coin based on new registered users. Well, see, this is the issue. Really, when you think about the problems with Bitcoin, they all stem from one core issue. They want to have a currency that is not tied to the policy of a government. And I argue that you don't want that. My argument is that the economies have a tendency to collapse. That's nature. That there has to be a fire and regrow stage in everything, and that natural disasters and risk are a part of life. And so your economic system has to be able to account for that. So really, you need a coin that you can modify the supply of, that you can have it print more or print less based on the economic conditions. And what do you do when the economic conditions are like they are now, and you print and you get stuck in this deflationary spiral that we had, for instance? I don't know, but research can be done about that. But having something where the supply of it is fixed is problematic. It's not a good thing that Bitcoin will go up, go way too high, completely collapse, and then be basically left for dead for 4 years. You know what I mean? Live Monitor says, big boys, no crypto is done for. Retail just haven't figured it out yet. I don't know. By my metrics, it's done for sure. Clearly, they're not going to give up without a fight, though, right? We also need to work over cell phone Wi-Fi as a mesh network, make each phone a hotspot that witness verifies. So if two parties transact, people in the area can verify. Well, isn't that how... There was one cryptocurrency that kind of worked like that. So this is the funny thing about it, is that if you really make a currency that is effective, like really is if you were to able to design the cryptocurrency that was the most perfect for doing transactions, nobody would buy it because you wouldn't be able to make money off of it, right? It's the whole proof of work system and the fact that it's deflationary that causes people to want to buy it and hold it, right? But that's not a good thing if you want to run an economy on it. So then you get into the argument about a store of value. So then you say it's a store of value, and you say, well, why? Why does it become a store of value then? Because people want it to be? I don't think it works like that. Like, I can't just go out there and, I could go and I could say, okay, I'm going to sell iron bars, but they're going to be Seth iron bars. Or maybe I'm just gonna write pieces of paper that say Seth coin on them. Or let's take it to the let's be a little bit more good faith than that. I always say good faith. Like I want to make an argument in terms of like the best case scenario for it, right? let's say that I went and I was able to get a printing press, like a real printing press, and I printed my own currency, Seth coin. Okay. Nobody's going to go and be like, oh, I really want to get as much of this Seth coin as I can. It's going to go to the moon, right? Because why? Why would you? Is there something about Seth coin that is going to hold its value? Like, there has to be a reason behind it, right? There has to be a reason that people want it. Okay. So for like gold, there are industrial uses for it, for starters, but and there is the history behind it, but you know, it would primarily had value because like governments were using it, right? So that's your big key right there, is that the government using something gives it value. You know what I mean? And if Seth started printing Seth dollars, nobody would care because no government or place would accept it. They're useless. They're useless, right? So why is it not the same with Bitcoin, right? If people can't use it, if you can't use it for things, it's not accepted anywhere by anything, then it's useless. And if they hobble the blockchain with these ridiculous requirements that basically make it so that you can't even use the coin, then like, what is even the point of it being there? At that point, it's not even a thing anymore, right? Because the whole thing was based on proof of work. If it's not based on a thing anymore, it's just IOU notes being traded back and forth on an exchange. You know? No, you there needs to be a reason. So making it so that you can transact with it is the smart thing to do, right? But they contradict each other, right? Because then if you make it so that they can transact on it and you make it stable, then you're not going to make money from just piling into it. Need a payment processing token that people get paid to verify go or no go peer-to-peer transactions. Yes, but that was what, again, I forget the name of it, but there was cryptocurrencies in 2017 that did that. There was one that was kind of like that, but you didn't really like it. People didn't care because you weren't going to make, 100 times your money with it. There was Ryblox. Ryblox kind of did that too. What did Ryblox turn into? They changed into something else, right? Nano, that's right. Where it does Nano fit on the list now? Well, it's not worth nothing. So it actually kind of went up, but it's already coming back down. Oh, I wonder, by the way. It's a little bit. Yeah, transaction coin needs to be inflationary to facilitate network liquidity. So Dogecoin kind of does that, right? But that's what I'm saying. It can't just even be inflationary. It needs to adjust based on the economy. So then you got DAI. And DAI has a system where holders can control that. Essentially, they can vote. And then if the economy collapses, those people lose their spot and new people are chosen. Let's see. So that one solves that problem, but because it's on Ethereum, it doesn't solve the throughput problem, right? It's like when you go through, there's a couple of coins that will solve one individual problem, but there's not a coin that I found that solves all of the problems, because there can't be, because problem number 4 is sovereign support. Right, which doesn't exist. And what's going to happen is they're going to make the US dollar coin. And then when you have US dollar, digital dollar, You don't have any need for any of this other stuff at that point, right? You can do all the same stuff that you can do on Ethereum, but you can do it on a state sanctioned digital dollar. I mean, come on, it's over for crypto at that point, right? At that point, the only reason that Bitcoin has any value is because it's not from the US government. But that's where you get this thing that's like, yeah, there's a lot of libertarians and people that think that we should have a currency that's not tied to a government, but I'm just telling you that's not what you really want. And so then Bitcoin will go back to fringe stuff, right? It'll be like gold, where there's these gold bugs that always think that gold is going to take off and then it never does, and that sort of a thing. I just can't fathom how to program something like that. This is where all this crypto gets away from me hand waving at that point. Well, it's so the base Bitcoin protocol is not actually that complicated. Actually, I forget what the exact proof of work problem is, but it's something that I could teach you how to do, and you could do on a piece of paper. It's basically like you get this hash and you need to find a solution to it that has at least a certain number of zeros, is what it comes down to. It's interesting stuff. Well, I'm noticing, by the way, there's still a bit of flattening going on. So the 5 and the 10 went down, the 30 didn't. But yeah, those are the four problems. Like this is the video. There are 4 problems with Bitcoin. 1, it uses too much energy. 2, you can't it doesn't have enough throughput. You can't put through the number of transactions that are necessary to run a world economy off of it, or even the US economy off of it, or even like a small country's economy off of it. 3, it is deflationary. You need to be able to adjust the money supply based on economic conditions. And 4, it doesn't have any sovereign support. Those are the 4 problems with Bitcoin. And my argument is that as such, Bitcoin has failed. That is the idea that Bitcoin can take over the world and become the dominant world currency. It cannot. It has passed the point where that could happen. If they had made the change to allow more transactions to go through, if they had made a change to, make it not use as much energy, and they had done this in like 2016, early 2017, then maybe they would still be in the running for it. But what happened instead was they put their own selfish interests, short-term interests, ahead of that. Miners did in particular. And so now it's been a good 4 years and countries are talking about making their own coins. And so the US dollar, since it's already on the horizon now, you've essentially lost. Like, you would have to get yourself to that position where you can do all of those things before the US digital dollar was even proposed. But now that it's not only been proposed, but it's been accepted as a thing that they're going to make and create, I say that the game is over. They lost. That's my argument. So how do I put that into a title? You know what I mean? I could just call it the top 4 problems with Bitcoin. But is that really going to get the clicks? You know what I mean? You want it to say something. How do you say something that is like upsetting to people, I guess you could say, but is also accurate to what the actual argument is, So then I'm like, Zero Hedge banned me. You make a video off of that. Well, I don't know if that's so wise. I should certainly talk about it, though, in the video. Yeah. BTC bear market thanks to short-term thinking. That's really what it is, dude. Like the thing that is interesting to me is that people talk about cycles. So one of the things that I see really commonly is like, oh, you must not understand market cycles because yada, yada, yada. And it's like, yes, okay, so movements that have happened in the past are more likely to happen in the future? No, there's no evidence that that's the case, or that will continue to be the case, rather. Why would it have to? It doesn't have to. So I feel that patterns and so forth are for people that just don't know what's going on, right? You don't need the pattern if you know why it's moving, right? You know why it's moving. You just trade it in the direction that you know it's going to move, and you can just ignore all the technicals, right? Well, it seems to me when I look at like why it is moving, we started to see a move at the beginning of 2020 that I didn't feel was justified. I never felt like they really got all the way down. Like they never, and then the pandemic came along and it completely collapsed. Which I think was a really huge indictment on cryptocurrency market in general, because it basically confirmed at that point that cryptocurrencies are risk assets, and when things get tough, everybody flees them, right? All of these things that people were saying, that it was like a flight to safety sort of a trade, and people are going to go there to flee from the US dollar collapsing, and all. It was, you can't take that seriously anymore after that one, right? So it collapsed, and then it received a bid because of a combination of factors, but I think the argument that the Bitcoin guys would make is that it received a bid because people were concerned about the value of the dollar, and so they're trading it as a dollar hedge, right? Well, so that's kind of what started it, and then it moved up faster than normal, and it was already overvalued to start with, and so they got to the upper bound really quickly. And then Elon Musk saved them from a crash and pushed it up even farther. So like I don't think that the cycles apply, right? Like I think there's not more people to come in. They say that you're so early on the adoption curve. I'm not convinced that that's the case anymore. I think that you look at the US population, there's like a certain percentage of people that are just never going to care and are not going to invest in a cryptocurrency. And it's a pretty sizable portion of them, just because they don't want to think about highbrow things like that. And there's a certain percentage that will just not believe in Bitcoin at all. And then there's a certain percentage that are susceptible to it and will try and get involved in it. And apparently that percentage is like 20%, because that's like what percentage of the population has Coinbase accounts, right? So I don't think that you got any more people up right now. So I say the cycle is probably over, right? And it doesn't have to go with the same duration or the same extent as previous cycles. In fact, I would think that if it continued to do the same amount as previous cycles, that would be a little sketch. Like over time, the cycles should be less and less, simply because there's no more people involved in it, and ergo it requires more money to push it up. No, people will always go to bonds and gold over Ghostware coins. Yeah. Well, gold didn't really fare very well during the 2020 crisis either, though, Ether8er. When we were starting, we had Sunday. I kind of stopped talking about some of the political stuff that he was interested in, so he hasn't come around as much anymore. But he was really very, very heavily invested in gold, and it was doing really well in 2019. And then the pandemic came along, and you would think, oh yeah, here's our chance. But no, like ever since then, it's been very tough for them. But yeah, the treasuries received a bid. That whole thing with the run in treasuries that we had in 2019 and then going into 2020 is really something else to think back on. At the time, I really didn't think that it was like, oh, this is the largest and quickest rise in treasuries that we're ever going to see in our lives. But sure looks like that now, right? Anyways, that's a video that I think I want to make. Maybe I can get it out by Wednesday. We'll see. I'm so passionate about it that I should be able to just get in front of the camera and explain what's wrong with it. Really simple, because I want it to be like the video, like you don't really know a whole lot about cryptocurrencies. Here's what the deal is. Here's the thing that they're not telling you. Here's the problems here, and I can even go into some of the counter arguments, because like when we talk about renewable energies, for instance, well, no, let's not use that one as the example. When you talk about the number of transactions that go through, right? So the counter argument that they're going to say for that one is, well, you put other stuff on top of the chain. You do things like the Lightning Network, or there are things that you can do to make it faster. Like there are other coins that are faster, and Bitcoin can adopt those things. And the counter argument to that is, okay, so do it. It's been 4 years now. You guys were saying that 4 years ago, and you haven't done it. Other coins have done it. So don't tell me that it's too hard and that they're still trying to work out the problem or something like that. It has nothing to do with that. The reality is that you don't want to do it. The Bitcoin ecosystem actively incentivizes people against doing that. That's why it's not happening. Even with treasuries dropping, I'm still short. Fed's got to do something, and I don't think they're so dumb as to keep printing. Well, this comes into this whole repo thing, right? So you've been seeing more and more people having to access the repo facility. So what's happening is that so when you do the repo facility, you give up reserves. You basically give them dollars and you get treasuries back. And you need those treasuries so that you have collateral for certain trades. And you need those so that you can transact for your clients, right? So often you need that collateral at like the end of the quarter, because there's all sorts of financial things that companies have to do at the end of the quarter that the banks help them with, right? Well, what's happening is we're not at the end of the quarter, but we are in a kind of a volatile time in the markets. And so people need those treasuries, right? So when Goldman Sachs and JP Morgan need those treasuries, what do? They use those treasuries and they keep them in, and they don't offer a lot of them in the repo market. So if you're like the smaller guy, like the regional banks and all the people below that, what do? You're hosed, right? You can't get access to that collateral from the other banks. And so you can't do business, right? This is why the Federal Reserve is directly concerned with this, because essentially what happens is the market for treasuries falls apart. The banking system can't work. So then, maybe Goldman Sachs and JP Morgan can continue to still do business, although they're probably the ones using it as well. But all of the small guys get screwed, and those are the ones that you really got to be worried about, right? So that's the Federal Reserve's interest in that, is that they need to keep the treasury market running, okay? So that presents a problem when you want to raise rates. Yeah. You want to raise rates, everybody's selling, and then the banks, they don't want to hold the treasuries. So like one, they don't want to hold them. Two, like everybody's selling them and going down, right? So and then everybody's going to need collateral to handle all of the transactions that the market is doing as they panic about a taper, right? So you get this situation where you have more liquidity needs in the market, but nobody wants to actually supply that need. So then what do you do in that case? Well, you have the repo facility. The Federal Reserve gives you those overnight repos. Probably they can, it seems like that works pretty good. So far I haven't seen some sort of negative impact from it. But that's what that's all about, right? But isn't that a reflection of banks overextending themselves on debt? Not necessarily. It could be. So, that's the whole thing, is that it could be you're a bank and you made a really bad call. And so you don't have a lot of money to do those things, right? So you don't have as many treasuries because you had to sell some of them or something like that, right? But it could also just be that you're getting so much business that you need to buy more treasuries and you just can't find them, right? Or the people that do have them don't want to give them up because they're also using them, right? Which is kind of funny because we talk about how nobody wants to hold the treasuries, right? So there's just kind of this dichotomy about nobody wants them, but then they have to have them, sort of a thing. That's where it gets kind of weird. But I think I've explained to you why it is like that, right? Can't earn interest if no one can carry debt anymore. Well, there you go. Fed's Brainerd, it's important that the cryptocurrency regulation system evolves. Well, that would be something enough to cause them to sell, per se, but they're not going to. They only sell over Chinese fears, not over when fears in the US, unless she said something really hawkish about it. Well, so far they're tilted to the upside. For reference, 2185 or so was Friday's high. So they just sold a good 2,000 contracts there and spiked price down. Yeah. I can't necessarily follow that just because, the edge might already be gone. Since we don't know why. Got to be careful like that. If I had a larger bias, felt like that there was a reason to be selling, then maybe I could follow it. But that was interesting. Yeah, well, it's been happening more and more lately, hasn't it? I suspect, though, that there's somebody out there that feels like they have some edge, and at some point they're going to get screwed over and they're going to be like, oh, we don't want to. Yeah, here. Oh yeah, that's not Zero Hedge, it's somebody else. That was a heavy push down and they didn't care now. Well, they're doing the same thing that I am. It's like, okay, it came and it's gone and we don't know why. It's not like there's some sort of well-known reaction that's supposed to happen off of it, Like, oh, everybody knows that when you get one of those, that means you sell. Tesla down, spot 88. The basis net of carries changed by a basis point, by the way. Not much momentum to carry us above Friday's highs. Well, or you said open. I don't know what the open is, but the high is 41.85. Let's just say that another 5-point move up. It looks a little questionable right now. On the same hand, it's only a few ticks up to a new high, so they could just say, I'm just going to ignore that. What is this? Interesting observation from Alan Cohen, former advisor to the SEC chair and head of compliance at Goldman, talking in a Goldman Sachs report about crypto ETFs. A number of firms have announced their intention to offer such a product. The SEC's mission to protect investors, maintain fair, orderly, and efficient markets, and to facilitate capital formation will be sharply in focus as regulators assess whether a cryptocurrency ETF should be approved. Indeed, a prerequisite, among other things, for a cryptocurrency ETF will be that regulators and investors are satisfied that underlying market prices are fair, accurate, and transparent, and the recent bout of volatility doesn't provide much comfort in this regard. Facebook is supposedly toast with new Apple iOS data features, but so many businesses use it, so I don't know. That one really confuses me either, Ader. Not that the issue with specifically how Apple's changes to privacy affects Facebook in particular, but a lot of Wall Street is long Facebook. For some reason, Wall Street loves Facebook. And I've seen analysts on TikTok that love Facebook. And like, what is the case? As far as I can tell, Facebook is a dying social network. Wow, look at this big, huge offer comes in at 41.80. Let's pull up the thing here so we can see. So there was a pretty big one going up into it. They went through it, and now it's showing back up as they push down. Hanging on to Fang bag holder? I don't know. There's got to be a reason why those analysts think that it's a great buy, even though I don't think that they're, I don't know. So anyways, they think it's great. But then when I look at it, it's like, that's a social network that is dying. They've already made some mistakes, and Apple is coming for their lunch. Because they basically, what are they doing? They're making money off of the user's data. And now Apple is saying, oh, we're not going to let you collect users' data anymore. So what's the value proposition for them now? I don't get it. Somebody please explain this to me. There's got to be something that I'm missing. How can so many people be so wrong? No, it has nothing to do with how many people are wrong or right. That doesn't matter at all. But there's got to be the Wall Street not just going to take that without a reason. There's some case that I'm not seeing. Tesla's now green, you say? You see, look, it's the same thing. It disappears, they stack and they push it down. Nassim Taleb. There is nothing wrong in losing money. There is something monstrously wrong in losing money while not being aware that you could lose money. Yeah. Mm-hmm. So who was it that cracked down on the spoofing? Probably the CFTC. I'm wondering if he was spoofing to push price down so he could get fills. That's usually the way that they do it, right? Unless they actually like fill it. Unless they push down here, like it shows back up and they fill it. I don't know. So there was some volume there at 41.80. Which is like illegal. It's that what was happening there is definitely illegal. Well, so the issue with spoofing is that I think that you have to read a certain level of intention into it, right? CFTC. Well, I'm going to tweet to the CFTC about it. I'm going to whine about it. Not that they ever respond to me or anything. Just because of that spoof, I am tempted to buy, to be honest with you, because that's the way that they typically do it. With the way that it's behaving and everything, somebody is clearly trying to make the market appear as though it is a sell, right? So I suspect if it is spoofing, why would you spoof it? So that you can get fills lower buy. You can get a buy. But CFTC are definitely the ones that are supposed to look at that one. JP Morgan on Tether's recently released reserve holding figures. The Tether Reserve Fund is a larger holder of commercial paper than most prime money market funds, as well as large corporates like Apple, Amazon, Google, and others. Yeah. That's probably problem number 5 is the fraud. So the top 5 biggest problems with Bitcoin. Bitcoin's 5 biggest problems. That's what I'm going to call it. Bitcoin's 5 biggest problems. ARK is up 2.3%. Hey. Well, I guess they deserve a reprieve at the very least, right? Man, Rhythmic Trader Pro updates a lot. $1641.00. I don't know. That's kind of weird. That it's the same version, but it seems to have updated because I didn't have the link anymore. I could try to pin it. But it doesn't. Yeah, it's weird. Kevin Spacey cast in first film since sexual assault allegations surfaced. Oh boy. What would the world look like if the CFTC employed traders and gave them 10% of the fines as a reward for catching stuff? Well, I don't know. Like here's the thing. I find it hard to believe that something like that doesn't happen and the CFTC doesn't investigate it. And clearly they must be, because people have been prosecuted for it. Especially something like that. I mean, anybody watching this has to have seen that, right? Surely I'm not the only one looking at that. I just happen to have this tape that allows me to see it really, really effectively, how many times they pulled it and stuff. Yes, sir. Let's see here. ECB doing some bond purchases. Don't know what to make of that, but okay. Well, now in the treasuries, we've oscillated across this range a couple of times. But in the moment, it sure looks heavy, doesn't it? Now the 10-year down a tick more than the others as well. Dollar still getting creamed over here. A little battle going on there at 41.82. Maybe not so much a battle, it's just back and forth there. They're buying and selling it both ways. Only when you steal from the rich people, as Reddit would have you believe. I'm sure that I think the issue is that when you see an order like that pop up and disappear, that's not enough for them to prove spoofing, and that they have to actually have actual. So I think what happens is they see that and then they start investigating. They go, okay, who put that trade on? And then they start looking at their messages and stuff, and they say, okay, so were they talking about doing it? And so in the cases where they prosecuted, I think that it was the case that they had messages basically from those traders basically talking about it and fully acknowledging that they were trying to manipulate the market. Right? The way that order showed up, it was like, seemed like algorithmic. Got a meeting come up. Hey, thanks for stopping by. They did just break the high there, but it didn't really run. Okay. A little bit there at 84. Yeah, I bet. Okay. They're nibbling at it. Ha ha ha. It was only 69 contracts went in there for a little bit and they paused. Pickle nerd, I'm not spoofing. Obviously, I wanted to sell at 41, 81, 25, but the market just wouldn't let me. So this is kind of interesting that when you look at the cumulative delta, it doesn't look like there's a very clear direction or anything like that, although it is moving up. But when you look at my indicator and you kind of do the math about where the market makers are positioned, it's very clearly the long side that's making money. Almost there. Probably could pull that and move it up a little bit more, but I like, where would I put it, you know? Well, especially since they've given me a little bit of grief there at 86. A little bit of difficulty moving up there. Yeah. Somebody taking some profits, I think. Nibble, nibble, nibble. There we go. Well, I think that's all we need for a Monday, man. Don't you think? We could still catch one in the treasuries here. The treasuries have been kind of doing some weird stuff, so. It seems to me like you could potentially buy it at 16, but it's a risky one. Because if they break through those on lows, you're going to get creamed, right? That also takes our R squared up into the 80% zone there. So, yes, sir. We could have... this could go. This could just keep going for all I know. Any new or existing Mileage Plus member who uploads their vaccination records to the airline's mobile app can be entered to win a round-trip flight for two in any class of service to anywhere in the world United flies. I don't know. Well, probably there's a lot of people that don't care and would be more than happy to give that to them. In order to the chance to win a round trip, that's where I'm starting to be like, So if I get the vaccine and all this stuff, I can, like, this is what the people that are thinking is like, I can maybe win. Like, maybe you should hold out. Like that for when they'll pay you $100 to do it first instead. Feeling sleepy now. No, I'm not saying a whole lot right now, but feeling a little sleepy. Oh, is YouTube giving us problems, or am I still on here? He's still there. Yes, because I just switched to my tab, and it's like, oh, I guess that would help, first of all. Nah, it looks like we're good. I think we're good. Oh, look, I can go back and watch myself on replay. Yep, I'm like falling asleep. I am falling asleep there. See, this is how I know that none of you watched the video. You all have it in the background with just the audio. Because there I am falling asleep. None of you said anything. Now some people are saying that Marjorie Taylor Greene is running the House Republican conference. How is that the case? The Charlie Bit My Finger video netted $760,000 in the NFT auction. You got to be kidding me. You gotta be kidding me. Maybe it's time to make that video. It's not the tech that matters. It's not the rapper. Jen B, hey, there you are. By the way, did you? I didn't check Patreon to see if you had fixed your issues, or because when I saw your message on there, I was like, well, it was probably just that I hadn't posted that day yet. And sometimes I don't post every day, to be honest. At these times, like I will sometimes. There's just nothing going on, and so there's no reason to post. These days, though, I should be posting every day because the crypto market is like on edge, right? I was going back and I was looking at it and I was like, wow, I've been posting this almost every day since 2017. Like, hey, maybe I should be doing more with it, huh? I don't know. I don't know. It does. I definitely think that I'm picking up on some sort of a market inefficiency, but it's just like, are you ever going to get the cryptocurrency market to care? See, if I was pumping Bitcoin, if I was like cryptocurrency is the future, get on the train, boys, we're all going to be rich, then everybody would want to know everything about it, right? But because I'm like, I don't think that cryptocurrency is going to be around in the long run. They don't care what I say. What time is it? It's a long day. It's just been such a quiet day. Remember I said, oh, I think you could buy it in the 10-year? Well, I think I was right. I don't know if you would have gotten filled at 16.5 though. That's a good question. Alex Berenson. The thing about vaccines, even if you believe the clinical trials enrolled the right people, they didn't. And I don't know about that. So let me just preface this by saying that they're tweeting something that I have not verified. Okay. And the LNP components were well understood. They aren't. You should be asking why the rush to throw out natural immunity and why the rush to vaccinate kids. Okay, now that is certainly something that I have wondered, is why they're all saying that natural immunity is, well, so I think that the reason why they throw out natural immunity is because the research suggests that your natural immunity doesn't last very long. Let's see here. Okay, I'm going to comment on it. I'm going to say. Goldman's interview with Nouriel Roubini and his skepticism about the value of cryptocurrencies and their ability to radically transform the financial system. So this one is a kind of an interesting one too, because Zero Hedge in particular used to like this guy because he was very much like doom and gloom kind of a thing. Okay, Nouriel Roubini is a professor of economics at New York University's Stern School of Business. He is CEO of Roubini Macro Associates LLC, a global macroeconomic consultancy firm. Below, he discusses his skepticism about the value of cryptocurrencies and their ability to radically transform the financial system. Why do you think Bitcoin and other cryptocurrencies are in a bubble? Nouriel Roubini. To start, calling them currencies is a misnomer. Currencies must have four qualities. They must be a unit of account, a means of payment, a stable store of value, and act as a single numerary. That is a word I've never seen before. Numerary. Wait, let's look that up. Have you guys ever seen that word before? Numerary. Numerary is an economic term of French origin which acts as a benchmark in comparing the value of similar products or financial instruments. A numerary is usually applied to a single good, which becomes the base value for the entire index or market. The US dollar remains the numerary for most commodity prices. Gotcha. What do you think is a good entry? 15. Based on my system, 15. Just be conscious that if we get 15, pretty good chance that they're gonna try and push through you and like really scare you at first. 1, 2, the recovery might come back up very quickly and get back up to an overbought condition very quickly as well. And those are like moving targets. So what it is today might not be what it is a week from now. I don't know. Like the decline in Bitcoin is enough for that I don't really want to be touching it, but I can't say with confidence that it's not, that it's not going to recover right away. Like they've been making an okay move today. 37. I don't know. Okay. Bitcoin and most other cryptocurrencies have none of these features. It's not a unit of account. Nothing is priced in Bitcoin. It's not a scalable means of payment. The Bitcoin network can only complete 7 transactions per second. versus a Visa network, which can conduct 65,000. It's not a stable store of value for goods and services. Even the crypto conferences I've attended don't accept Bitcoin for payment because the price volatility could wipe out their profit margin overnight. And the crypto universe doesn't offer a single numeraire in which the prices of different items can be denominated because there are thousands of tokens and thus limited price transparency. Even the Flintstones had a more sophisticated system by using shells as a single numeraire to compare the price of different goods. Bitcoin and other cryptocurrencies aren't assets. Assets have some cash flow or utility that can be used to determine their fundamental value. A stock provides dividends that can be discounted to arrive at a valuation. Bonds provide a coupon, loans provide interest, and real estate provides rent or housing services. Commodities like copper and oil can be used directly in different ways, and gold is used in industry, jewelry, and has been historically a stable store of value against a variety of tail risks, including inflation, currency debasement, financial crisis, and geopolitical and political risk. Bitcoin and other cryptocurrencies have no income or utility, and there's just no way to arrive at a fundamental value. A bubble occurs. I disagree. The fundamental value is that you can make transactions with it. It's just not very good at it. A bubble occurs when the price of something is way above its fundamental value. We can't even determine the fundamental value of these cryptocurrencies, and yet their prices have run up dramatically. In that sense, this looks like a bubble to me. Why are more institutions interested in getting involved in cryptocurrencies if they are in a bubble, and will this help stabilize and credentialize the market? Nouriel Rubini. Given the large trading volumes, it pays to facilitate trading activity, custodial services, etc. But do institutional investors really want to get more involved? Maybe some do, but I don't see it becoming mainstream. There's an argument that because only a fraction of institutional money is currently invested in Bitcoin relative to gold, the price of Bitcoin could go to the moon as a result of asset reallocation from gold. But I'm doubtful institutions want exposure to an asset that can drop by 15% overnight. There's also always the risk that something else backed by real assets might end up completely replacing Bitcoin as an alternative store of value. Bitcoin could disappear one day, but gold won't. And the idea of corporate treasurers allocating to crypto assets is totally crazy. No serious company would do that because treasury accounts must be invested in stable assets with minimal risk, even if they provide very low return. Any treasurer who invests in something that falls 15% in value overnight will be fired. Sure, Elon Musk can do it because he's the boss, although he's since backtracked somewhat on Bitcoin due to environmental concerns, but few other people are in that position. While gold has experienced periods of volatility, a set of economic fundamentals generally drove those price swings. Gold rises with inflation and inflation expectations because it's an inflation hedge, and it falls when the Fed tightens monetary policy and rates rise, not just in nominal, but also in real terms. For the same reason, gold is inversely related to the value of the dollar because a falling dollar tends to higher commodity production costs and prices, including for gold. When there's serious political or geopolitical risk or a financial crisis, the value of gold rises because it serves as a safe haven asset, as does the Swiss franc, the Japanese yen, and U.S. treasuries. Yeah, it used to. It hasn't really been like that the past year. A whole set of variables can be used to determine the demand for gold relative to its supply, which makes it possible to establish a fundamental price. In contrast, the prices of Bitcoin and other cryptos don't have a consistent relationship with economic fundamentals that explains their volatility or suggests that it will eventually subside. Wrong. Because so the fundamental value of Bitcoin is that you can make a transaction with it. The economic fundamental that can explain its volatility and its movement is going to be related to the market overall. So Bitcoin should be positively correlated with the S&P 500 to some extent. That's kind of where it's a problem. This is so weird. Like, I don't know. I think I have a good argument. I think that if Nouriel Rubini was here in the room and I explained that to him, and I could say, well, here's why it does have a fundamental value, but it's still problematic, and I think he would, maybe I could convince him. That's crazy for me to think that, probably, but I think I could convince him. I think I could convince more people. I just don't, like, how do you get the voice to do that, you know? Probably never will. But let's make a video about it anyways. Okay. But couldn't Bitcoin serve as an inflation hedge similar to gold, given that it doesn't have exposure to currency debasement? It's true that inflation and inflation expectations have moved higher. The dollar has started to weaken and U.S. break-evens are well above 2%. But while the price of gold and other inflation hedges have reflected these shifts to a limited extent, at their peak, Bitcoin's price had increased by more than tenfold from a low of 5K to more than 60K in a year. That can't be explained by a fear of a currency debasement, because if there was really such a strong worry, gold and other assets like tips would likely have rallied more. So something else must account for the rise in Bitcoin and other crypto prices. Yes. Does Bitcoin offer protection against debasement? At least among the cryptos, it can't be debased because the cryptographic rule determines the increase in supply and caps total supply at 21 million. But just because something is scarce doesn't mean it has fundamental value. It's not difficult to create something with limited supply. And there's no reason artificial scarcity is valuable in and of itself. Beyond Bitcoin, the supply of most cryptocurrencies is determined by a bunch of whales and insiders based on some random rules and can be used to increase supply ad hoc. Their supply is actually increased at a much faster rate than the balance sheet of any central bank, given their proliferation of the number of coins. Scarcity also doesn't make something a reliable store of value. It took 100 years for the value of the dollar to fall by 90% in real terms. In 2018, it only took 12 months for thousands of cryptocurrencies to lose the same amount of value, and even Bitcoin fell by more than 80%. That's currency debasement. Yeah. The treasury's up on its highs now. I wonder. But the E-mini continues to move higher. I got it like, 80 and then took 85 and then got out? Because I was like, I'm not so sure how far I can let this run. No, I got it. Yeah, I got out at 85. But I could have gotten way more off of it. Yeah. Crazy. Bitcoin isn't even a reliable hedge for risk-off events, let alone inflation shocks. It's actually highly pro-cyclical, yes, which I was just saying. During the peak of the COVID-19 shock in the early 2020s, U.S. equities fell about by 35%, but Bitcoin collapsed by around 50%. Yep. Other top 10 cryptocurrencies fell by even more. In difficult times, crypto assets don't go up, they go down if investors want inflation hedges. A wide variety of assets have proven to be good inflation hedges for decades, including commodities and their stocks, gold, tips, inflation adjusted, and other forms of inflation indexed bonds. I do worry that monetized deficits might eventually lead to fiscal dominance and higher inflation, but I wouldn't recommend Bitcoin or other cryptocurrencies to protect against this risk. Okay. Nascent technologies are often volatile in their adoption phase. What makes this moment for crypto any different than the early days of the internet? More than a decade on from the advent of Bitcoin, it's nowhere near as transformative as the internet was at a similar stage. The World Wide Web already had around 1 billion users at 10 years in. While it's difficult to know the total number of crypto users today, active users for the most traded coins probably amount to a maximum of 100 million. Transaction growth for cryptocurrencies has been slower than the case of the internet. And transaction costs remain very high, with mining revenues as a share of the total volume of transactions still very high. After 10 years of the internet, where there was email, millions of useful websites, apps, and technologies like TCP and HTML protocols with broader applications, in the case of cryptocurrencies, there are so-called DApps, decentralized apps, but 75% of DApps are games, like CryptoKitties, or literally pyramid or Ponzi schemes of one sort or another, and the other 25% are DEXs, or decentralized exchange, that for now have few transactions and little liquidity. So the comparison with the internet just doesn't ring true. Well, okay. I mean, what he's saying there is true, but I don't know if that's a sufficient argument against that that crypto is volatile just because it's early in their adoption phase. I think that you could make the argument that the cryptocurrencies are volatile because of the properties of the coin, because of what it's levered to, and because it's deflationary and because it has a fixed supply and things like that. When demand changes for it, that changes the price dramatically, and that's why it's volatile. Ergo, even if cryptocurrencies became very, very established 100 years from now, it'd still be volatile because of those properties. Doesn't the concept of decentralized ledgers and networks have value, though? Noriel Rubini, I am not sure it does, but the reality is that the crypto ecosystem is not decentralized. An oligopoly of miners essentially controls 70 to 80% of Bitcoin and Ether mining. These miners are located in places like China, Russia, and Belarus, which are strategic rivals of the US and have a different rule of law. That's why the US National Security Council started to worry about the risks that could pose for the United States, and 99% of all crypto transactions occur on centralized exchanges. Many cryptocurrencies also have a centralized group of core developers who are police, judge, and jury whenever updates or conflicts over the blockchain arise. Rules assumed to be fixed have been changed in these situations, so the blockchain isn't even immutable. See, Noriel knows what he's talking about. He's been on this. He's been following it. Everybody wants to say, oh, these guys that are against cryptocurrencies, they're just old fogies that don't understand the technology. No, he totally follows this and knows and has been arguing about it for years and understands it just as well as any of the Bitcoin supposed experts. There's evidence that ownership of crypto wealth is also highly concentrated. Less than 5% of addresses own around 85% of all the Bitcoin based on CoinMarketCap data. There's also evidence that whales holding a large amount of the total supply of Bitcoin and other cryptocurrencies actively manipulate their prices. Tons of news articles have detailed active manipulation in chat rooms in the form of pump and dump schemes, spoofing, watch trading, front running, etc. This behavior is much worse than even penny stocks, which suggests a high likelihood of an eventual regulatory crackdown. Yes, I can only hope. Does any innovation in the crypto ecosystem look promising to you? I think so. So you made the argument that cryptocurrency is not actually decentralized. I think that a decentralized ledger has value if it was actually decentralized. I think that all of the banks could get together and they could have a decentralized blockchain that they could use to clear trades and stuff like that. And you wouldn't have to wait 3 days for your funds to become available after selling, right? It would be a good thing. It would be useful. So yes, the technology does have use. And the fact that the U.S. government is looking at making digital dollars is proof of that. It's just that it's not going to be Bitcoin. Does any innovation in the crypto ecosystem look promising to you? Not really. The next decade will see radical financial innovation across many dimensions, disrupting the traditional financial system, but it will have nothing to do with cryptocurrencies. During this innovation will be a revolution in financial tech owning to some combination of AI, machine learning, and the use of Internet of Things to collect big data. Fintech is already transforming payment systems, borrowing and lending, credit allocation, insurance, asset management, and parts of capital markets. In the context of payment systems, billions of transactions are made every day using Alipay and WeChat Pay in China, M-Pesa, Kenya, and most of sub-Saharan Africa, and Venmo, PayPal, Square in the United States. And these are all great companies that are scalable, secure, and are disrupting financial services. They're not based on decentralized finance and have nothing to do with crypto or blockchain. I've honestly spent a lot of time looking at this because more and more people are saying that while maybe these aren't currencies, blockchain technology could be revolutionary. There are now all of these buzzwords like enterprise distributed ledger technology or corporate blockchain, but I call most of these projects blockchain in name only. Something truly based on blockchain technology should be public, decentralized, permissionless, and trustless. But looking at decentralized DLT, distributed ledger technology, and corporate blockchain experiments, almost all of them are private, centralized, and permissioned because a small group of people has the ability to validate transactions, and most are authenticated by a trusted institution. And even among these projects, few have actually worked. One study looking at 43 applications of blockchain technologies in the non-profit sphere for reasons such as banking for the unbanked, giving IDs to refugees, and transferring remittances found that 0 actually worked. The fundamental problem with the whole space is that it assumes the idea that technology can create trust, but that's mission impossible. Resolving the challenge of authenticating ownership or quality requires due diligence and testing. Why should I trust a DLT that says my tomatoes are organic? I trust Whole Foods that actually tests the tomatoes for chemicals. The idea that technology can resolve the question of trust is delusional, so I'm deeply skeptical that blockchain and cryptocurrencies, for that matter, will be the revolutionary technologies that their proponents suggest. I would still argue, then why are they making a digital dollar? Right? Clearly, the ability to transfer money to make transactions is valuable. In as much as a cryptocurrency can do that, it has some value. Bitcoin has intentionally hampered its value because the miners make more money from doing that. Was it choppy on YM? I did not really notice. It was a pretty solid move up though. I just took my quick profit. Was like, it's a Monday. It already looks like overbought. You know what? It went sideways after I bought it for a long time, and then we moved up a little bit further. But how can I know how far it's going to go right now? Well, let's go look at TradingView. We can see where their targets are, where so they're almost there. 4202. Oh, so 4200 is maybe the target. I see. Maybe I could have held it, but it's a Monday, like it's not like there was any news or anything else like that. So I don't see anything that I know has a really solid track record that could have told me to hold it. I think, though, this situation that it's like, well, they didn't sell on the open, they're buying, somebody's spoofing. Yeah. I think that the original trade was okay. It wasn't like a great trade, but it was okay. And then should I have held it more? I've been trying to hold them more lately and having trouble with it, Volume low today so far. Yeah, but you don't want to short a dull market, right? YM tethered to overnight high, ES broke free. I see. Well, I do see the NASDAQ took off compared to the E-mini. I can also see that they've still got some room to make money on the upside, potentially. Zhang Zhao. I don't know who this is. According to the minutes of China Financial Stability Board, we resolutely prevent and control financial risk. We shall crack down on Bitcoin mining and crypto trading activities in order to prevent individual risks from being spread to the societal level. Thank you. Listen. SEC, CFTC, all these people. Do you see this? Do you see what China's doing? Why is China trying to protect us all from the risks of Bitcoin and you're not? Get your butts in gear. Why am I popping now? It looks like 4,200 is the target, so there's probably still another 5 points in it. If you get a good entry. I would say that my entry on this one was pretty good. I only had 2 ticks against me. Ooh, look at the big old iceberg at 19. Well, in this case, the probability that it reverts back down is actually pretty high, I think. Let's see how wrong I end up being. Is this going to be a 15K? Okay. Well, they traded through it 13.5. Some people hitting 18.5 now. So maybe some people that were expecting the iceberg to hold bailing. 5-year hasn't downticked yet, but it looks like it could. Nope, I guess not. I guess not. Not yet, at least. Yay! Hey, was that a good trade or what? You got to make that cheddar while you can. Who knows what tomorrow will bring? No, that's why. That's the. You got it all wrong. You got. Oh, that was Ace that said that? No, Ace. I must reprimand you. Ace, there's always tomorrow. There's always tomorrow. When what tomorrow might be even more amazing. Huh? It's better. It's better to save your money today because you might have higher probability opportunities tomorrow. You will always have higher probability opportunities in the future compared to what there is today. Because today is just like, ugh. I don't know. The volume's not very good today. I guess it's a really strong trend up, but the volume's not that good today. Oh, but you're still long, huh? Well, he probably follows his little trailing rules. There sure is a lot of orders up there at the 4,200 area. So it's probably going to act like a magnet and just pull us right in. I have scalped 3 small ones to get back to a craft cheese slice. Great allegory. Market Ear asks, Ark, is this the bounce? Please, no, I don't. I want Ark to go away, to be honest with you. I want them to go away. I don't like her. Like if Ark goes, okay, if Ark recovers and goes up to a new yearly high here, I'm just going to be like, I'm going to be so fed up with this market. Because I don't think that Ark should be, like, she's doing stuff that is not prudent money management. What are you talking about? He got in at 9 a.m.? No, what do you mean? Oh, you're saying that he got in at the very beginning. Yeah, okay. So he was in way earlier than me. You mean 9 a.m. Eastern time, yeah. He probably got in when he normally does. Although I didn't really, well, I guess it was a pretty good little buzz there, but it would have come back to his entry at some point, close to it at least, depending on the exact price that he got. But then in the open, you're home free, right? Facebook still secretly tracks your iPhone. This is how to stop it, tweets Forbes. Oh, you see, guys? It's not all over for Facebook on the iPhone. I know you should have taken that off for tomorrow. I've already moved on. I don't know what I was saying that he's responding to that about. 7 a.m. your time. Oh. I'm actually really surprised that they traded down through 18.5 and propped back up so easily. I suspect that, so when you get that sort of an iceberg, you kind of have to wonder, okay, was the move up because somebody was buying and now they're just finishing their order? Now that they're filled, there's less supply, and so we revert back down. But then why were they buying, but maybe they have a good trade and they've moved up. And when I come in and I try and look at the Treasury Analytics, 0.9314, no, it's back to 0.8338. No, Seth is right. It's a horrible trade. Just because you made money off of it doesn't mean that it's a good trade or a bad trade, right? Don't fall into that trap, right? You got to remember that a lot of things are just random. So for me, I don't want to trade if there's not a lot of activity. So that's the big thing that I'm pointing out here, as maybe for your strategy, and like there's some things about that I don't think we understand. Maybe for your strategy that's okay and it doesn't matter. But for me, especially if I'm going to be trading largely off of fundamentals and stuff, the market not being as active today is a pretty good reason to not trade. And I would think that if Ace had lost money off of that or it had a difficult day, they'd be looking back and be saying, oh, well, it's a low volume day. I should have known better. You know what I mean? So that's all I was trying to get across to people. So this is kind of slow action. Then you need to take that into account. I like that Treasury is stacking hard at 19.5 now. Would it kill? No, I would never say that. Like, here's the thing, Ace. You know that you do a good job. I don't need to tell you if you're doing a good job or not. I'm concerned about the person that's never been in here before and they don't really know what the market conditions are. That's all. And I'm worried that somebody will come in here and look at this and say, okay, so next time I see a day like today, I should go long and just hold it and I'll catch this huge winner. And that's just not the case, right? That's all I'm trying to say. Yeah, track volume. Yeah, I think you should. I don't know. This comes back to like, how do you empirically prove something works, right? So here's what I can tell you. The market making algorithms that are the vast majority of the market activity and that you would be using if you were trading for a bank, for instance, they track volume. In particular, they're interested in the volatility of price and the volatility of volume and the seasonality effects in order to try and make an estimate about how much volume should be coming in versus how much volume is coming in, to calculate with the probability of informed trading and whether or not it should hold a bid and offer at a certain spot. I traded YM and Seth roll worked. It looked crappy, but ES opened up and going long was a good trade if volume was lower than this. Yeah. So it comes back to the thing, I didn't turn my robots on today, but it comes back to this whole thing that's like, is there really a market inefficiency about the cross of this 10-minute moving average? I can't prove it. Oh my gosh, no trader should think that. Should think what? You should be more specific about what you're responding to, RJ, because I have a hard time. I move too fast. That's the problem. I need to stop. Give you 5 seconds to type your thing, and then you. I'm gonna run my Bitcoin algorithm here while we're waiting. Yeah, about 5 minutes left. Well, I guess I will write up a script, and maybe tomorrow I will, maybe tonight I will record a video about the top 5 problems with Bitcoin. Okay, so what, traders shouldn't be aware that a lot of market action is random and that some things that may appear to work won't work in the long run, and that you can be very easily fooled by randomness, because that's a thing. And so at what level of scrutiny do you need to put on something before you say that it works or doesn't work? How do you prove that it works? This is something that I think people need to consider. Volume or not, high breaks sometimes worth the trade just to see today. Good example that we see often enough in these conditions. Yeah, live action. Well, I think in this case, I suspect at least that the options are still having a very significant impact on the trajectory of the future of the index, and ergo this 4200 being a big magnet was probably a good part of it, hence how it's able to continue moving up even though the future in even though the volumes in the future is a little iffy. Is that a rule? No, that's analysis. A rule would be like, I don't, don't move the stop. How many losses until you're going to stop and so forth. But I don't think what you want to say is rule. I think what you want to say is entry conditions, right? So could that have been a reason to take a trade? It could have. And then up to you to determine how you decided to take that entry. You said traders coming in here and held a trade in low volume will now do that. Well, but I do think that some traders will think that the volatility of the day doesn't matter, and it does, very much so. They deserve to lose money if they just go, okay, I'll do that. Well, what was it? What was it again? There is nothing wrong in losing money. There is something monstrously wrong in losing money while not being aware that you could lose money. Looking at your accounts balance always told me if your strategy is working. No. Just so yeah, no, I don't agree with that, live action. So just because you made money today, so that is the fallacy of past results indicate future results. They don't, right? So just because a strategy made money today or made money this week, heck, even if it made money this year, doesn't mean that it's going to make money next year. In fact, historical track records suggest that at some point you are going to have a year that your strategy is not profitable, even if it's a good one. I get tired of this, like, we can empirically prove that the market arbitrages away edge, and that even though the market is inefficient, that it's very difficult to find like statistical patterns in it and make money off of it. And then everybody continues to say, yeah, just find this specific set of injury conditions and just trade that. So it's like, we know that doesn't work. But I still get so many people that don't believe it. And like, there's nothing you can say to prove them wrong, because it's like, well, I made money today, so okay, yeah. But then like in a year from now, when you lose the whole account, if that happens, right? So wouldn't it be prudent to truly verify that what you're doing works, so that you don't run into that surprise at some point, that you're able to maintain the gains that you've made? Seems to me like that would be a prudent thing to do, right? And I'm telling you that even a year's worth of performance doesn't necessarily tell you about how a strategy performs, especially if you're taking a skewed risk reward, you know? Okay, if you're doing something that wins 60, 70% of the time, you need a lot more data points to verify that it works, or a lot more data points to see how it performs. Anyways, it's time for me to get going. I will see you guys. We call it slow grind up. Slow grind up as month end nears. You're right. That's why it's helpful to apply filters. There you go. That's where I'm getting at. Is this like, could there be a technical edge? Yes. There's no reason you can't find a technical edge. They're going to be harder to find, but a technical edge will probably always exist in the markets. But how do you find it? You're going to have a complex set of conditions to find it. That there's going to be times where it works and it doesn't work, and you have to adjust to it. So there's this whole system, this Markovian system underneath, that you kind of have to try and figure out, and that some people intuitively can, right? To determine when I should be really bullish about it and when I shouldn't be. Because like I said, like, it's very difficult, especially with the way that I trade. If I'm doing if I'm either doing arbitrage or I'm trading off of news, if there's no news and then you not have arbitrage, then you don't have a lot of volume to get quickly filled and stuff. That makes it a hard trade. So especially with the way that I trade, that's like a really good reason not to trade. But does it tell you that you're not going to have a move up? It doesn't. But you might be able to work out a system whereby the condition where it's slow, but it ends up doing a grind up anyways, that you might be able to predict it. Possibly. Well, how is that? How would you do that? I don't know. In this particular case, I don't think that Ace looks at that. I think that he just looks for the cross of his moving average and takes one every day, no matter what. So, okay. I gotta go. Stay profitable, friends.